Record mining difficulty shows industry growth despite Bitcoin bear market. The bears can't keep miners down as data shows increasing hash rate, which could lead to some uncomfortable hash price realities. Bitcoin may be in a bearish market, but the mining industry is growing bigger than ever. Bitcoin mining difficulty set a new record high for the sixth time this year on Tuesday, reaching 31.25 trillion. According to mining data from Bryans, the 4.89% adjustment was the third largest increase this year. Even though the leading cryptocurrency price has dropped sharply through April and May and continues sitting over 50% below its all-time high for late 2021, the mining industry growth is not slowing. Traditional investors, retail buyers, and even day traders may be bearish on Bitcoin, but miners are not. This article unpacks some of the data that demonstrates the mining sector growth despite Bitcoin's current bearish market conditions. Bitcoin mining growth data. Bitcoin price and mining difficulty demonstrated a fairly strong positive correlation throughout most of 2021. During the bullish periods of early 2021, followed by the China ban-related crash this summer and a market rebound to close the year. Both metrics move closely together, but difficulty and price are typically only positively correlated during bullish markets and when both metrics increase together. The line chart below visualizes price and difficulty data from the past 3 years, and for the past 6 months as Bitcoin's price has fallen, mining difficulty continued to surge. Now looking at that, mining difficulty continues to surge. That means there's more and more miners coming in to mine Bitcoin. The more people mine, the harder the hash rate becomes. But the more people is gaining Bitcoin for themselves. That makes Bitcoin for the long run very bullish in my opinion. Before continuing, have a look at Bitscap. Automate your crypto trading with powerful bots. Bitscap helps you set simple and sophisticated trading robots to make a profit autonomously 24/7 in different market conditions, even with a 7-day free trial to test it. All you need to do is connect your API keys to your exchange and you're ready to set up your first bot. US Senate confirms Jerome Powell for another 4 years as Fed chair. In a 80-19 vote in the Senate, US lawmakers confirmed Jerome Powell as the next chair of the Federal Reserve System, where he will also serve as a board member until 2028. The United States Senate has confirmed the nomination of Jerome Powell as the chair of the Board of Governors of the Federal Reserve System until 2026. An 80-19 landslide vote on the Senate floor on Thursday, US lawmakers confirmed Powell as the chair of the Federal Reserve, a position he held from February 2018 until February 2022, when he was named chair pro tempore until a confirmation vote could be secured. Powell was one of 4 Fed nominees, awaiting a full Senate vote following weeks of delays due, in part, to partisan obstructionism. Republican lawmakers in the Senate Banking Committee boycotted a meeting in February that would have likely sent Powell's nomination to the Senate for a vote earlier. However, some of United States President Joe Biden's nominations for the Fed has recently moved forward. In April, the Senate confirmed Lael Brainard as Fed Vice Chair in a 52-43 vote, and on Tuesday, Vice President Kamala Harris cast a tie-breaking vote to confirm economist Lisa Cook as a Fed governor for a term ending in 2024. Philip Jefferson had the largest bipartisan support in his 91-7 confirmation vote on Wednesday, which also granted the economist a seat on the Federal Reserve Board until 2036. Former Obama administration official Michael Barr, who was on the advisory board of Ripple Labs for 2015 and 2017, is awaiting approval from lawmakers following President Joe Biden's announcing him as his pick for Fed Vice Chair for Supervision in April. According to the White House, Barr was a key architect of the Dodd-Frank Act, legislation that continues to influence financial policy in the country. During his first run as Fed chair, Powell was vocal on what he thought the role of digital assets should be in the US markets. As the space grew, he said in September 2021 that he was unlikely to support a blanket ban on cryptocurrencies, and he has also lauded stablecoins as a useful, efficient, consumer serving part of the financial system if they are properly regulated. YouTuber KSI says he lost $2.8 million on Terra in one day. KSI says he has now lost at least 8 million in crypto so far and admits to having a gambling addiction. One of Luna's celebrity holders is taking a social media to document his losses. British YouTuber and rapper 𝙏𝙏𝙖𝙑 𝙁𝙤𝙧, more commonly known as KSI, shared Thursday morning that the 20.8 million he invested into 𝙏𝙏𝙖𝙑's cryptocurrency Terra Luna had plummeted to a new valuation of less than $1,000 in a day. Luna is a cryptocurrency created to part to help maintain the peg of stable dollar value of Terraform's lab algorithmic stablecoins Terra USD, but USD lost stability on May 9th and has since plummeted to just 38 cents. Because of the connection between USD and Luna, the latter nosedived from $62 on May 9 to just 1 cent. What a collapse! Native crypto exchange tokens hint at first signs of broader market recovery. Crypto exchange tokens are faring much better than blue chip cryptocurrencies, including Bitcoin and Ether, in the lingering aftermath of Terra's implosion. Crypto markets have hit their lowest point in more than a year as the fallout of Terra's implosion weighs heavily on essentially all digital assets. The total market capitalization of all cryptocurrencies bottomed out at nearly $1.1 trillion during Thursday morning's trading. That's less than half their market cap at the start of the year, when crypto was collectively valued at $2.2 trillion. Since the nadir, however, traders have returned about $135 billion to crypto's total market cap, although it's still unclear whether the bounce will stick. The top 10 cryptocurrencies, excluding stablecoins, on average recovered more than 14% since the market bottomed out, led by alternative layer 1 token Avalanche and Binance native exchange coin BNB, which each gained about 25%. Market leaders Bitcoin and Ether are recovering comparably slower, rising around 9% since the local bottom. In fact, some of the most resilient cryptocurrencies of late have been the native tokens that power trades on exchanges, particularly LEOS on Bitfinex. Akin to Binance BNB coin, Bitfinex traders can save on fees by holding the token, but LEO has fallen less than 2% since Terra's algorithmic stablecoin USD first lost its dollar peg. Major cryptocurrencies Solana, Polkadot, and XRP has all shed around 25%. And over the past day, the native cryptocurrency of Bitfinex competitor FTX FTT dropped less than 4%, while Ether and Cardano plummet 13%. Daniel co-founder of crypto investment firm CMS Holdings, thought Blockworks exchange tokens have benefited from booming trade volumes inspired by volatility, mostly on account of inbuilt burn mechanisms. Those mechanisms typically serve as a method of rewarding token holders. Exchanges buy back tokens and burn them, removing them permanently, reducing circulation supply while briefing up buying power in a bid to boost prices. It's been a really large 24 hours for exchanges, so there's been a ton of burning and buying, it said. The exchanges are just doing an outrageous amount of business right now and earning loads of money, and that flows into their tokens. Exchanges volume is altogether up 14% in the past day, according to data from crypto index provider Nomics, with Bitfinex jumping a whopping 34%. The worst of the Terra debacle could be in the rear view mirror in a short order. When Terra died, that obviously hurt a lot of people, and I think a function of that they had to de-risk elsewhere. I'm sure that people had to make margin calls and a lot of forced selling happening. As a result of the deep pegging, I would think that part of the market cycle is largely over. But the main thing we can take back from this article is the fact that we have layer 1 coins, we have layer 2, we have DeFi, we have NFTs, we have play to earn. But there's one we're all forgetting, the exchange tokens. The more volume goes through exchange, the more tokens gets used for fees and gets burned. It's another category to add because it's endless opportunities. Leave me your thoughts and concerns down below. And please, smash that like and subscribe button to help the channel grow. Have a great one.